Hello, 219 Sunday session. We're going to run through about 110 tickers by request from you guys and gals. But first, I want to make 2 points. One of which, it felt bearish last week, but as I said in my recap, it wasn't. We did the job we needed to do. And I'm going to start with that. The job we needed to do, this is a 1-hour chart, is to hold the base from January and confirm the breakout from February and confirm the breakout from January. From here on out, that's February, and we just want to hold these ticks right here. And if we don't, it's not a big deal. I would get long around here with another effort for another rally. But it would be best if we hold this area. The easier plan of attack for this starts here. I also want to back up a little bit to show you the upside potential we're fighting for. So this is a failing point multiple times, and we're in the process of confirming breaking out from it, and that's how it happens. You break out, you come back and you struggle with it. If you are able, you heard the if part, of establishing support in this zone, you're able, even come down to here, you're able to come back, take this out, and launch yourself to the upside potential of this. It's big, but let's not focus on how big it is before we focus on if it's going to happen. All right, so to that, over the weekend, I'm seeing a lot of positive bids on crypto, and it just shows that risk appetite is not dead. So if you think that the world money is scared, you wouldn't think that they would be investing in a coin like Solana. It's almost 25 again. And things like Mana and Zilliqa, which are pretty much crap perceived, and they're getting bid. So if the world was worried as a collective about their money, they would not invest it in risky stuff. They usually hunker down in cash or hunker down in good stuff. All right, so let's open up the list. American Airlines first. This is a tricky chart. I think in order for you to really appreciate this chart, you need to look at a weekly chart, and I will in a second, but this is that's why I put that note here. So they're trying to deal with a struggle area from June, and it's pretty wide, but that's not the story. So they do have support, and it's spread. They have support here, but I don't think it's that strong. If they lose this 15.7, they might end up in the 14s again. But if you look at it from a weekly perspective, this is like the level from which they came public again. So if you scroll really back, they're down here, and that's where they did this rocket moon, and then down, and then up here, and then down, and now they're trying to get back into this cluster. So it not only has history from here, it has history back a long time. So don't just focus on what's going on now. Zoom out and know that these are old levels they're dealing with. I'm comfortable going long anywhere inside this area. I don't like airlines. Their business is not very well run. They're amazing. They're nickeling and diming us to death. You want to breathe on an airplane, you have to pay. And they still can't make money the way they should anyway. So I'm always leery of them. But I wouldn't short it. It is shortable, but I wouldn't short it. Apple, you see how it, like the S&P, trying to break out from here. It's doing a better job than the S&P because it wants to establish footing here, buyers. And if it can and take this out, Apple's gone to finish the breakout from here. And that's what the S&P is trying to do. And if you look left, that shouldn't be easy. Those are prior fails from last year. So Apple is doing what the S&P is trying to do. So far, so good. They averted disaster, and they try. You can see they're buying dips, right? So that's the mode we're in. I'm still in the buy the dip mode. What level we are, salut Claude, it is the question on a different level for every stock. So Apple, just buy the dip. These are a little too fast for me. So if they come back to 146, 144, I will try longs again. AbbVie. So I had a path down to wherever it fell. They hit it, and now they're trying to come back out of it. If this holds 148-ish, plus or minus $1, they have the opportunity to take this out. And now the bigger if they take 154 out, they can get to 58 or 60. But I don't know why they need to do that. For me, they drop from here to here. They can get to 50% of it and stall. So you'll have to study the stock if you're trying to invest in it. It doesn't look like I have enough information to add to my positions if I'm long. It looks like on a long-term basis, on a weekly basis, they are buying dips, and this is a dip. So if you know the company, maybe you can make a better decision as to whether it's time to get long it or not. So if I go to 15-minute, yeah, there are sellers up here at 154 and strong buyers down at 145. That's the short-term range. Airbnb, they reported earnings. I should switch back to regular candles, what everybody's looked at. They gapped up. It's definitely not an obvious entry point for Airbnb. I have never seen a chart like this, and I said, oh yeah, that looks like a good entry point. I don't care how much I love it. Look, this area is so pivotal. This was a base. This was a gap. And there's this now. And 3 prior fails. No touch for me. I think you will have the opportunity to buy closer to 121 than 131. I don't know if it goes to 152 first or what. But to me, this is, if I'm long, I'm booking profits if this was a trade. If I'm looking to get long or I want to add to my longs, I would refrain. I think you'll get better entry points on any time frame. All right, Accenture. I haven't looked at that in a while. Stuck in the middle of the range on a daily basis. Higher lows, lower highs. The battle is, I think, 297. If they take 297 with these higher lows, if they take this out, I think they have a chance of taking these two. This candle is pretty bad. From a standpoint of, okay, let's take all this junk out. This candle is pretty bad. It was a prior fail. Yeah, we called it on the way down. I totally remember that. Something about a wolf wave. I don't remember if I traded it or not. Sounds like I did. But anyway, this is a problem. So they'll have to deal with it. And I think if they take this out, they will have a good, what do you call that? Head of steam to do it. So problem 1, problem 2. I didn't put it right here because I see these. But this is a big turn, big fail. I would imagine it's going to be a problem. So as an investor, I could wait in it, stay in it. If I wanted to nibble longs, I can. They have a higher low trend. I think the company's okay, P&L wise. I don't know them very well. Looks okay. So as an investment, I'm not adding to current positions. If I'm looking to nibble, I can, as long as there's no earnings. If there are earnings, you should, no, there aren't. Soon, maybe. You should admit that you're just taking a wild guess. But it's not a bad entry. ADM, Archer Daniels. All right, so it's falling into a prior base. This base worked very well the first time. It could work one more time. I would exit at 86 because I think this will do this. They will bounce and they will find sellers, and I can almost guarantee you. What I don't know is if they're going to lose this one. If they are, and that's a question mark, they could do this. And the target is not here, it's here, which could be below here. So this would be a better entry point. So I'll put an alert here just to wake up and see if I want to trade it. This is an entry point against this with stops. Look at it. Lower highs, you know, they're systemically selling them up against the prior base. So there should be a bounce, but they are selling rallies inside a descending channel. So be careful. Agnico, so gold took a tumble, right? And I want to tell you how not to trade assets is by feelings. And sometimes you can take advantage of it. So I saw a long gold down here. We hit a target and it started to fall. And as soon as it got a couple of red ticks, people started to say, okay, I'm looking to buy the dip. And they kept at, should I buy the dip? Should I buy it? No, not for me, not for me. So here's the thing. I'm lazy as far as trading is concerned. I want to take the trade that has the most obvious elements in it. And this was not a most obvious element, nor is it here. It's better than before, but it's not yet. It looks a lot better in companies like Agnico. and gold, Barrick Gold. So as a company, I would be willing to trust it falling into support, but you should be aware that if gold, the price of gold, continues to fall, they will continue to struggle. If you notice here, this was a buy the dip with stops, and so I'm going to change it to say this is a support zone. All right, and it's pretty wide. So if I'm long for an investment, I'm not, and I haven't closed my longs, I'm not getting out. If I'm looking to get long for the midterm, I could nibble, and I would not go all in, because if they lose this, they will go below 30. What would take them there? I don't know. Maybe the price of gold is ready to collapse. I have no idea. I can't imagine it is. If they're buying crypto, you'd think they would buy gold, right? So this was a pivotal zone, so I would say this is also a problem on the way up. So yeah, it's not bad to go long gold stocks that are quality. This is one of them, but it's not bulletproof. And below here, they're suspect. I would be brave down here. I've never traded Agnico, so I don't know. Okay. This one is stuck between two values. If you're a midterm buyer or trader, this would be an entry point zone and exit. Just keep trading the, wow, trading the range. 230 looks pretty good. It has been in the past 6 months. So shorter term, if somebody rallies from point A to point B, 50% is here, plus or minus. So it's not a bad start. It's not a perfect bottom. AMD. I think NVIDIA reports earnings, so that makes the trades on AMD wild cards. It hit the target from that red thing. Target 2 is here. So I'd be interested down here. We can take out these channels that I had mentioned before. They have been selling rallies, and this one looks better than all the other rallies. Next trigger long. Okay, so just like the S&P, they're breaking out of somewhere. They poked above it. They're trying to come back and establish for footing. So as long as they establish footing, take that out. We knew it was a breakout. Then I would be willing participant in here as a trade, down here as an investment. So I'll take that out. I don't think we're in that mode anymore. We're in the buy the dip mode. So which zone am I willing to buy the dip? For me, these guys rally too much, way too much. This one less than NVIDIA, but if you can see it, they're still, you can argue that maybe they're not out of this. They're still going sideways, trying to get out of it, but they're not out of it. So are they buying dips? Question mark. This is a dip. How deep is this dip going to be? Right? If they stop halfway between here and here, perfect. They come back and they have the opportunity to take this out. So I'm not too eager to buy it here. I will be buying a better buyer down here. And even when it gets down here, what I would do is I would sell a put or a put spread down here personally, and then add a call or a call spread out in time. So I would gently buy it. I wouldn't buy shares, and I definitely would not go all in. I mean, it's not bad. Above 90, it could rally. Let me give you a little history on this guy. The problem is like 104 to 108. As long as it's below 104 to 108, the bears are still maybe in charge. That was the area for this giant head and shoulders that gave us this arrow. So, backup story. Company is good financially, fundamentally, I should say. Amazon, it's a decent value for the long-term investor. I don't need to add to my current risk if I have it. Technically, I have weak spots below, which was pretty wild rallies, but it was inside pretty wild drops as well. It too is trying to get out of this sell the rally mode for a long time. I'm brave into 90. I don't want to add calls without reasons. I don't want to add shares without reasons. If I'm starting a position, I would definitely leave more than half room to add. So if I want to buy 100 shares, I would not buy 50. I would buy 30. If I wanted to buy 10 calls, I would buy 3 or 4 tops, and I would leave room for error. Maybe split the risk between buying calls and selling puts or put spreads. So buy the dip zone is okay. If the markets are higher in the future, Amazon is higher in the future. I'm very confident of that. I want to warn you, though, I learned something about Amazon that I want to dig deeper that could tell that the economy is in deep trouble 6 months down the line. And I say 6 months as is like sometime down the line. I don't know when. So I've always said I don't want to listen to the GDP numbers because they're not accurate from the government. And but so I will listen to the reports from Amazon because they're legally bound to report penny accurate, right? Their statements, the P&L statements have to be penny accurate. And if that's the case, I would listen to them and tell me if the economy is still growing. I think the last 2 quarters they had single-digit growth, which is pretty bad for Amazon, which is pretty scary. But the scarier part is that last week I may or may not have learned, so you should go do your own homework, that the AWS, the part that does not have consumer spending in it, which is the part that owns the internet, the cloud services, grew 20% more than 20% year over year, and it's about 20% of their business. So you're telling me that a chunk as big as 20% of your business grew 20% and the overall growth is single digits? That tells me that mathematically spending on Amazon websites is red. So it's shrinking in sales. It did not deliver single digit growth from a spending perspective. So what state is our economy in with the consumer spending? And consumer spending is 2/3 of our US economy. That is a scary proposition. I have not verified it. This is back of the napkin numbers that I'm sharing with you. So the next report from Amazon will get me bullish or bearish the economy. That's pretty scary. Okay, ARK-F. This is the ARK Invest. Very, what do you call that? High profile. People love to hate it. You should learn what's in it. Usually high profile companies that are not bad. This is about financials. So the XLF is a little bit too high for my taste. The ARK-F, I'm not sure. I know that they need to hold this, technically. If they don't hold 17.6, they might end up in the 16s. So this is not an obvious entry point. This is a pretty big fail. And if you look back, it's too active. But if they do take this out and take this out, they can come back up to here. But I think that's a long conversation. First things first, establish footing before you establish a lower low. Look at this devastation. So there's a lot to chew on here. This was the world before COVID. COVID, yay, the moon, hell, and now they can't get out of hell. They're not even back to pre-COVID levels. So you can see how a line like here is so clean. We'll get you 27, but I don't think it's going to be easy. So if you force me to get long this one, it would be in the mode of buying dips and preferably by selling risk below it. So on a really bad day, I could sell a put or a put spread. If I study the index ETF and see what's in it, I want to see what components are in it. I don't know the components of the F. ARK-K, I kind of have an idea. ARK-F, I don't. So do your homework. And they look the same. ARK-A would be the one I would trust better because I know some of the companies off the top of my head. Same comments, though. Has support, better not lose it. If it does, it comes back to here. So there's a good chance, not a good chance. There is a chance you would buy it below 37 in the next month. But I don't know which will break first, this one or that one. And if this one breaks, will it take this one out? So it's in the middle of a range, and that's the battle. Lose this, you come down to here. Take this out, you kind of on your way to higher highs. I know the name Altice. I don't know what they do. So Altice is building a base. Has a failing point that they need to take out. Almost like what I just said. Everything I said about ARK-K from a chart perspective is the same. They went into hell. They're trying to get out of it. And they're trying to build a small base. If they lose it, they'll go back to 4. And if they take this out, they have some breathing room. 650, 670. BABA, I would not start longs here. Technically, it could go down to 92, maybe even 88, maybe even 84. I made money shorting BABA against all odds. It was not an easy short. I don't want to trade BABA because it is open to Chinese headlines, which I have no idea what's going on there. Political headlines in China, and the company itself seems like it's doing well, but I really don't know. So too many variables I can't control. Too many blind spots that are not in Apple. Why? Because Apple doesn't depend on headlines from China because China wants to break Apple. China wants to break BABA, and they can. They can't break Apple. They can kick it out of China, and it will hurt its P&L, but they can't shut down the company and force them to sell assets and things like that, and they can do that with BABA, so I'm not involved in BABA. If I'm looking to trade it long, inside 192 would be much better. Under 90 would be definitely better. Look, what is this? This is not a good base for anything. So come down into this cluster around 88, plus or minus, and then come back up if you want to. And when you come back up, are they going to sell it at 104? So it's definitely not for me from a daily perspective. And on a shorter time frame, you can see how it's bleeding lower into a better support zone. There's not a lot of volume here. Okay. If you forced me, I would have shorted Bank of America and I would have made money. Instead, I shorted American Express and it made me money. All of the banks were short from a chart perspective. They clearly have an okay business. JP Morgan, Bank of America, the XLF, and American Express were shortable, and I shared the short on Amex. Ascending channel, so they're buying dips inside the ascending channel. You can see it. So I would give them credit for that. Dip bought, dip bought, dip bought. So are they inside this? And how strong is this? And can they take this out? Oh, you guys can't see it when I record it that way. Oh, bummer. Okay. So let me see if I can. Good thing I noticed that. I think that they're not visible. So are they inside this ascending channel? Are they buying dips? If they lose this value right there, 34 and change, they might come down to 33, which would be a better entry point. Look, I have a buy the dip opportunity, and it's not right here. It's anywhere in here. This is going to be difficult, but if you take it out, you might get to here. Take a little leg higher. I should stop saying here and here and here. I should give values. I don't know what that is. It's stuck in the middle of the range. It has buyer below 55, sellers, hard sellers above 61. So make sure you know your range. Short term, you have to know that not to buy shares and calls up into here, not to buy puts and sell short and bail on your longs into here. Trade the range. Biogen. Okay, on a daily basis, it is vulnerable. If it loses 265, it might fill the gap. Not completely, but the target is around 235. So, this is not an obvious entry point for Biogen. Whatever this was, it's crazy. Overdue for a bounce. Well, that's old, so take that out. So this zone is pivotal for a while, it looks like. Yeah. So this is the weekly chart going back 5, 6, 7, 8 years. They're literally in the middle of the decade-long range. Not an obvious entry point from that perspective. So whatever decisions you make on a short-term basis, make sure they're based on that. You have sellers into 286 and you have buyers below, and they better hold up. This buyer better show up. If you lose that buyer, you go lower. Bito. I'm all in. I'm not all in. This is the price of Bitcoin. This ETF tracks Bitcoin futures. So basically, if Bitcoin's rallying, this is rallying. I shared several longs. The last bunch were selling puts at Bito under $10, and they all paid up. And I also said I would go long Bito somewhere around 11.2. I can't remember, but 11.5. You clearly have a lot of money in that. If it's a trade you took, you can scalp some. I close my Bito trades if and when Bitcoin gets to 42 to 45. What? Nick, are you insane? It's like 24 now. Yep, that's the plan. I said 1922 when it was 60 something, and that was crazy back then. Maybe I'm right this time too. I don't expect it tomorrow. I expect drops, maybe big scary drops too. And if it goes down below 10 again, I will add. I'm not all in. But look at the opportunity it's trying to capture. Big prior fail, not much going on here. Look, there's no volume here. So as a chart with not a lot of volume, if there's not a lot of volume, there's open space. So it's an easy whoosh. So they tell me that Bitcoin trades in spurts, in cycles. And this looks like a freaking cycle. How long do cycles last? The last one, downside, lasted a year. So this was the top of Bitcoin, and that's when they introduced BITO, unfortunately. Ooh. But if you look at Bitcoin, which is coming, the cycle was way up, way down. Maybe this one is way up again. I don't know if it'll be able to do those way ups again, because now it has futures contracts. So the Wall Street will need to manipulate it in order to not to blow up their contracts. So maybe it won't be so fast as before, but I think it has upside. Bank of New York. On a daily basis, I think you will get an entry under 46. That's the only thing I'm going to tell you. It might get to 54, and if it does, then maybe that scenario goes away. So if you get to 55, that scenario may have gone away. Otherwise, you might bleed down to 46. You do have support around 50. So what I'm saying, don't short it, just be careful adding or going all in. Bristol Myers, one of the companies I don't want to trade ever again. One of those charts that is just annoying as hell. It has support. If it loses 70-ish, it might come down to 66. It has better support there. I think it has a lot of resistance above 74. So if you're trading from here to here, from 70 to 74, okay. If you're investing and adding to an investment, you better study the company. The chart is not that great. Boyle, I'm all in. No, I am not. Okay, Bill, where are you? All right, so I will answer Boyle using UNG, okay? Because Boyle is 3-time UNG, and I think UNG is on the list. I've nailed the sticker that I don't know, and I don't particularly like. This is natural gas. I set us up for a win on the way up, and I held us back from going in on the way down. Last week, I was short puts at 8.5, and when they were at 60% of maximum gains, and they were at 40 to 60% of maximum gains for days. And then finally, I told the person who asked me for them, I'm buying it back, leave money on the table, and if they haven't, now they're down 80 cents a contract. So they said they exited like I did. And I currently would step away from it because, look, I'm going back 2015, 2014, and I still don't see a matching value. So this is an all-time low, according to this chart, for natural gas. I'm sure it isn't, but maybe they haven't charted it since then. So what am I catching here? Nothing. So walk away from Boyle and UNG. Just walk away. We don't know if it's going to be $3, $4, $5, $1. I don't know. We had a crisis that caused natural gas to go through the roof, and that was the war in the Ukraine, I think. And I think Europe has something to do with it. Way too many variables for me to tell you. And literally, the chart has no clues. Zero. We're done. We don't have any clues from the chart. So you get long UNG now or Boyle, you're hoping things will get better. You could make a lot of money. Clearly, the stock runs a lot. But you're just literally guessing. All right. I don't want to scare you out of it. I'm just telling it to you like it is. This is Bitcoin. Same as BITO earlier. On a daily basis, it could drop to 2,000 and it would still be totally okay on this breakout. Just like the stock market, it had a prior fail and it's trying to break out of it. It's okay to fall down to here, like the stock market, come back and take this and go here. All right, so I'm long Bitcoin. I'm not adding. I'm long from the lows. BX, that was another win, like American Express. I did not argue with the company. I mean, they have a decent business. I just noticed a pattern. This was the prior breakdown, the one before it, the one before it. So I did this, and I copied it and moved it over to here and moved it over to here. And I was like, why not again? So whether it comes down more or not, I don't know. The trade worked. So I would exit it if it was bought puts. unless they lose this. If they lose this value about at 90, they might come down to 84. I think I only sold call spreads, so I won't benefit much more. If you own naked puts and you can leave runners, maybe that'll be good. Okay, Citigroup. Like all banks, they're better short than long. But for Citigroup specifically, you have this value at 53.2 versus 49.2. You lose 49.2, you can get in at 46.5. You take this out, you can make a higher high. That doesn't look that easy for me. I think down is easier than up. But there's no clues. So what do? Iron Condor? Maybe. Charter Communications. What do they do? Provision broadband communication services. All right. Tough business to be in. So this area is support zone. It's pivotal from a while back. So I'm just reusing lines. And the resistance is definitely here. And it's a zone. I think it's not just a hard line. Let's zoom back out. Yeah, it's a zone. So far, the arrows have been COVID low. That's important to keep showing. I guess there'll be support here too. So I don't have a lot of good information to act. They're going sideways for a while. They have resistance above, they have support below, and they're both zones. So this is one of those not great investment midterm because it's so choppy on somewhat stable business. I don't know. You take this out, you can get much, much higher. But you need to have intestinal fortitude to withstand dips. So maybe selling a put spread out in time, down here, collecting a few bucks, and buying a call spread with like 3 months on the clock. This way you avoid everything in between. If it rallies, you make money. If it drops, that credit put spread will show some risk. CL, I don't know if you meant Colgate or not. I'm doing Colgate. Not an obvious entry point into 75.5. That's too big a rally. I would have booked my profits. Buy. If I was stuck here, I would be out so fast, or here, I would be out so fast. If I bought the dip here, I would be out so fast. I wouldn't short it. It might have some, it could get to 76, but there are sellers at every step. So the easy rally is done. However, they could be rounding bottom, so they will buy the dip as it happens. So if it falls back into 74 or 73.5, that would be an entry opportunity for a trader. CLF, I would have shorted it. It still looks like a bearish position down to 18. And now you have 21 and 19 battle. So this is your immediate battle. Here. That's your battle. I think there's a decent chance it could do this. One of these. Pop one more time and then let loose of it and then come down here and then come back up. Then it would be in a descending channel. I'm guessing. Okay, this is my instinct. Of course, the box is a catalyst. So if they take the upper end of the box, they come up to here. But this is a sane path, and that would be an entry point down here. So I would look into, I'm not like hating on it. Comcast, there you go. Last week I drew this and they did that. Let's see if I'm right. There are sellers above 40. We'll see if they show up. Coin. So coin, I don't trade the coins. Same example. Okay, the same argument I made earlier. If you saw me, I don't trade companies that depend on an asset price, especially volatile asset prices, because so coin is a company, so it will trade with the stock market. Let's say crypto is rallying and Monday, Tuesday, the stock market crashes, coin will fall. It can't stay with crypto if the whole stock market is crashing. Everything within the stock market will come down. So it's got the problems of the stock market. It's got the problems of each individual company like itself, and it's got the problems of Bitcoin. So it is an extra variable that is incredibly tied to its stock price that I don't need. Like all other companies have extra variables, but they're not as tied to their stock price as it is with Bitcoin, okay, and gold. So this is pretty scary. I'm telling you, if you're trading it as a proxy to Bitcoin, you're making a mistake. You have a cheaper, more liquid thing to do it with, which is BITO. You don't need to own crypto to trade crypto. You can now trade BITO, which is directly the price of Bitcoin. If that was your reason you're trading this one, Mara, the other idiot one, forgot what it's called. Anyway, the one that flipped from being a biotech to a miner, stop. You're making a mistake. If you were long and this got you whole, I would have gotten out so fast. So it will continue up with Bitcoin until the stock market corrects, or until it reports earnings, which is soon. It looks like, ooh, yeah, I would not touch this company. I don't care how much money I'm missing out on. And if you take a bet for the earnings, just make sure that it's not a full-sized, high-conviction bet. You're going to make a lot of money if they spike. I don't want to stop you from doing that. I just need you to know that you're gambling into the earnings reaction. But Nick, they're going to deliver a great P&L. It doesn't matter what they actually deliver overnight. What matters to that open price is what were they expecting. Let's say they delivered the best report ever and they were expecting better, they're going to sell it. CSX, the whole industry got whacked out last year somehow. And at least this one is this the one that's had crashes recently? Anyway, let's talk about the chart. High, low, middle of the range. No clues from the chart. So you're going to have to get closer in time. No clues. Stuck in the middle of the range. So you have a buyer into 29.7 plus or minus, and you have a hard seller into 32.8. You take that out, you have the chance of building a higher low trend. Until then, you're ping-ponging inside this wide range. Oh, look at that. Resistance, and I put a box, called it seller, and they failed right inside that box. You lose this one, and you're coming down to here. What? Yeah, don't be so don't have too much conviction. There are buyers below, but this is a hard line in the sand, and if you lose that hard line in the sand, theoretically, you're going to like 12. But I'm not saying that, but it's doable. I would stop out below here so I don't find out whether the $21 buyer or the $19 buyer will show up. That is a nasty spill. So for the next day or two, be careful. Pops will be sold. If it gets to 24.20, it's going to be sold hard. When it comes back from that, will it make a lower low from where it pops? Let's say it pops on Tuesday and it gets here and it gets sold. If it loses this level, goes to 22 and it repeats, pops again, and it gets sold again. All right, CVS, I know, made some headlines last week. I don't remember what they were. So if I'm long, I can stay long. It could go to 94. That's on a daily basis. If I go to a 30-minute chart, you can see how there's a buyer below and a gap and a seller above into 90.5. Respect that. Dips are buying opportunities into this buyer. So if CVS falls into 86 or 86.50 or even 87 and you're buying the dip, you're not crazy. You're hoping this holds and they come back up and they take this out. Just make sure you're actually trading it. Caesars. Oh, interesting. Okay, so let's take out all of those. We know now that there's support. And support worked. And I'll move that here. Oh my God. What the heck happened? Okay, so this is too obvious. 57.2 should bring 70 plus, but I think it's too obvious. So what I'm saying is easier said than done. You see it, it's too enticing. Buy the dip below 50 for that opportunity. So if it falls below 50, I'll put an alert. Maybe it does its thing where it catches the bottom and then comes back and tackles these. I think if you pull it on a daily basis, it's too easy. It will need a headline. When is her earnings? Is that this week? All right, so anybody asking me for charts for today with earnings are coming, please keep in mind, if I don't catch the fact that the earnings are coming, everything I said here means nothing on earnings day. And there's no reason why it's not. In fact, I'm going to take this out. There is no reason why it's not 46 at the end of next week or sometimes this week. Just like there's no reason it's at 64. Yeah, I'm going to say it. So if you're actually investing investment size setups into earnings, you're gambling on a headline for the one day. Like if you know it's a value for 10 years and you're going all in now, maybe you can convince me, but I still think you're crazy for doing it because you don't know anything what's going to happen overnight. It could be plus or minus 20% overnight. You're saying over the long term it doesn't matter. If that's the case, then why do you put it in? Why not wait if it didn't matter? If it really didn't matter, you should be able to wait as an investor. As a trader, then you shouldn't go all in because you know you're gambling overnight. Overnight. Not like on the company long term, just overnight. Okay. So it's easier to get to 46 than 60 from my years of looking at charts. But the headline could get it at 60 or 70 or 80. I have no idea. Okay. Same comments as AAL. It's easier to drip down to, say, 37 or 36 based on the daily chart. Let's go into the nitty gritty. This is a short-term time frame. They're selling rallies maybe. So the bulls want to get above 39.40 to erase that habit before they lose 37.60. So they're selling rallies. So they are selling these rallies. You can see it, right? There's one, there's one, there's one, there's one. Are they selling this rally as well? Like this one? And if so, will they lose this one? Because if they do, they'll finish my arrow. So if they sell it and then come back to here, finish the arrow. I'm not going to put it there because I just talked about it. Datadog, didn't it just have a rally? Yeah, it did on earnings, and it's giving it up. Okay, so now it's a better entry point. If you felt anxious of buying Datadog up here, or here, or here, or here, or here, or here, this is your chance to buy it on a dip when nobody's buying it. It is so much cheaper to buy company calls or company shares when it's red versus this. You can't even believe it. And you don't even need a better level. I'll give you an example. If you bought this company here with a call and then you buy it here at the same level with a call, this call would be cheaper than this one. You'd be overpaying for this one, underpaying for that one because it's coming down. The bids for the calls are weak. You would offer your number, they will take it. As opposed to here, they want all the money for their calls. So this is a cheaper call at this level than at this level because it was going up here. So if you're buying this higher low trend, makes sense. If I'm getting long into 76 from a trader's perspective, makes sense. Anywhere below that, it also makes sense. The opportunity is to take this one out. Datadog is not that bad, actually. I don't know much about their business, but from a chart. Disney, I wouldn't touch it. I was vindicated. The earnings said lower is easier, and now it's coming back to earth. The rally was too big. This was Bob Iger return, and then the Bob Iger flapping his lips about reinstating the dividend. That's not what he said. If I'm not mistaken, he said he will ask the board to see if they will do it. The Borg. Did I say the Borg? Star Trek. The board. You should study the Borg. We are becoming the Borg. They want us to be the Borg. The collective is winning, which is sick. That's pretty hilarious. Resistance is futile. You will be assimilated. Whether you believe in my values or not, you will become one of my values. Okay. So this is a company that has the best assets on the planet. Everything they do, everybody knows everywhere in the world. So it's just insanely good company. Management, questionable of late, but it has decades and decades of good performance. So I will give them a pass. This rally is gross and disgusting, and I'm glad they sold it. And check it out. They have been doing this for years, over a year. So they are selling rallies, right, at different intervals, and that is another rally. So they just sold almost half of it. Now Disney will be a much better entry point. I'm going to add it. Look at how many times you guys asked about it. to my watch list because it's almost halfway. Now I'm confident in buying dips in Disney because this was chasing a rip. I hope you weren't one of the ones stuck up here. Just look left, people. Just if that person looked left and saw this and said, yep, that would be a good place to buy because last time that guy bought it and made a ton of money. No, they didn't. They lost a ton of money, and here I am coming to bail them out. And these above them. Never a good idea. Now coming back down, this buyer who sold here is probably looking to buy it again. Hey, last time it was here, I made money. Yep, I can do that. So if Disney loses this one, that means the market is collapsing. But Disney is in the mindset of buying the dip opportunity for me right now. Devon, yes! I cannot believe it. I am vindicated. Look at this. That is insane. Where's my mic? Hold on. I have a flashlight the size of a mic. That's my mic drop. I don't hate the company. I hated the message and the price action. And I drew it, and this is exactly what happened. Look, 2 chops, a third one, and whoosh. 1 chop, 2 chop, third one was the whoosh. Now it's falling into support. If you tell me somebody's looking to get long Devon, that would make chart sense. I want to caution you that the sellers are still in charge. So they are selling rallies. Rally sold, rally sold, rally sold, rally sold, rally will try to be sold. Eventually they will stop that, and this is as good a place as any. Now this is on a daily time frame. Let's go to the weekly. Okay, so having said that, I'm going to tell you that there's a chance it could be 40, 41, 42, 39, something like that. It's a chance. It's not a guarantee as much as this one. Devon was a short. I was confident of that. But I didn't want to propagate the same message because the oil trade has been very emotional. So emotional that I had a boilerplate answer. My answer to every oil company was, for months, I did it automatically because I was answering it all the time. And I didn't want to piss people off. Investors should avoid. Investors. Traders, have at it. Up here, if you're buying as an investment into Devon, Oxy, Exxon, Chevron, I think you're going to be in pain for a decade. And that was my message. Investors should avoid. Traders, have your thing. And this is now a trading stock. And the trade says you do have support. If you lose this support, you're going down maybe to 40, maybe 38, 39. I wouldn't short it here. The easy work on the short worked. I would short it here. And when I say short it, I mean like buy puts or put spreads or sell a call spread. All right. eBay, not a long on a daily. It could go lower. 46, maybe 43. I used to buy a lot of things on eBay. I don't remember the last time I bought something on eBay. And I do try every time. Every time I find something on Amazon, I go to eBay, see if I can find it cheaper. And I don't. So eBay, if you lose this one, you come down to here. I'm looking to buy a PC, and I tried on eBay. It was just an ocean of confusion. So I said, nope, screw it. I wouldn't. So if you lose this one, let's see what this one is, 47.5. You could end up in the 45s, in spite of a lot of support, maybe even 44. You do have a lot of sellers into 50. So if it goes to 50, I would buy a put or sell a call spread. Oh, wait, I wouldn't do any of that. Earnings are coming. Yep. So be careful. The last earnings were a drop and then a subsequent rally. The earnings before that were a drop. The earnings before that were a drop. And the earnings before that were, I don't know. I don't need to look back any further. So not for me. That would be the answer. There are better stocks. EMR. Wow. Look at these arrows playing out. You can't make this stuff up. I don't remember drawing these. Look, that drawing started here. What? Wow. Okay. I don't know when I drew this or what, but it's playing out. What is playing out? This pattern should have a target of 78. So the easy part has happened. From here to here, it's difficult, but that's the ideal pattern. They might try to pop one more time. So be careful chasing it into 89. I think you'll find sellers. And when the sellers show up, will they be able to break this down at 84? If so, then you'll have your final opportunity in below 80. So that's the plan. Fade the rally and see what happens, and short it if you want to get to here. If not, get long here from a trading perspective. I don't know much about the company. This is shorter time frame of the same chart. You can see there are sellers here and barely buyers here. You lose that buyer, you come down to here. Same comments on a different time frame. End phase. I have a lot of people itching to go long. Some people did not believe me about not going long. I still think it is not a long. It played out my downside scenario. If you take a long here, consider exiting here, because I think it's selling off in a descending channel right now. I hope I got you out of it, or kept you out of it. It does have a lot of support. The company's great. The products are great. I shared a credit put spread for somebody that wanted it. If you want it, it's probably still there. Hit me up during the week. We'll see if we can trade it. I'll put it in my add in phase 0. It is on there, so I'll check it out. I mean, you lose this, you come down to here, 180 or something. Let's look at the 30 minutes. Okay, you see how there are sellers at 217.5? You don't want to argue with these guys. So which is stronger, the seller here or this buyer? That's the question. The seller into 218-ish or the buyer into 199? Energy transfer. Not an obvious entry point. It's in that box. If you lose the bottom end of the box you see on your screen, you might end up in the 1220 zone. Anywhere below 1220 makes a better entry point. I think rallies can be faded. You have a seller at 1320, 1325, pretty hard. You have a buyer here. How strong is this buyer? How strong is this seller? That's your battle. You lose this one, it means you lose that box and you end up down here. That's a better entry point. And Etsy, I like the company. It looks like they're tracing out my downside scenario. It's close enough to where it's buyable, but if you lose this 127 level, you might end up at 122, 120. So if you twist my arm, I could do a credit put spread. Thanks, Ed. Right, so eventually end phase will recover. Somebody's making a comment in here based on a wave count. EXPE. Buy the dip into the box, fade the rip into the upper end. That's still the mode. Did I put a, yeah, credit put spread? Somebody must have asked me about it. So if you force me on a dip, I would credit put spread it somewhere. Why not? Now that list is growing. Now I have a lot of junk in it. FAZ, what is this? XLF, 3-time bear. Yeah, I'm not a fan of any of these 3-time this and 3 times that because they are manipulated. They literally have somebody moving things around to make it look like something else. I don't trust Wall Street. They're notorious cheats. Now, this stock has been financial bear and the stock chart looks like this. So I don't mind longs in this one if I think the XLF is overextended. So here's the comment. Above 1650, you can get to 17 or 1730. You have higher lows. You lose this one, you're coming back to here. So I'm not a fan of a chart that looks like this. Clearly, it doesn't hold value. If you're buying and adding to your longs in this stock, you're making a mistake. Not my opinion. This is the chart over time. It does not hold value. Oh, but Nick, you don't understand. This is because it doesn't matter what it's because. You don't average down in something that continues to fall. So you're either trading it from point A to point B or you're not touching it. You forget it exists. So above here, above 1650, you could get to 1730 and you exit. You don't hold it. It doesn't hold value. I just showed you. GE. I'm short GE and it made me money and I booked some and I'm still short with runners. I'm not that happy about my short anymore, so maybe I'll take it off. The chart is kind of crazy right now. You do have a strong buyer here and a strong seller there. I think the sellers are pretty strong. Now, if somehow the buyers break out from above 85, it's gone to 87. Or if you lose 82, you will challenge this again. And the harder thing to do is to lose 80, and then you can get to the 70s. So if I'm right about more downside, the battle is here. They're going to try to bounce it, and if it does this, this is a tiny head and shoulder-ish, and that's not a big deal. This is the downside scenario. So the scenario will be down to here. So it will then re-trigger this one. I don't know. All right. This was the put calendar that I had. One of them. I bought a put and I sold against it several times. It looks like I have one for next week. I'm pretty sure I do. Yeah, that's what I have now. But I sold 2 before that expired in my favor. So if, let's say, I can't remember how much I paid. Let's say I paid $1.80 for it and I collected twice 40 cents each. So now I only paid $1 and I collected more for this. Those are not the actual numbers. I'm just throwing out examples. So yeah, my put that I bought is lower than what I paid for it, but I've collected money against it. So I'm not losing money. Griffin. I don't know what that is. Wow, that is an incredible trend. Did you miss it? Whoa. And scene. Yeah. Okay, so I don't know what this is. They're buying dips. Make sure you're invested and you book your profits wherever. Weird stuff going on here. So you need to study. I don't think the chart is any help. What are you trying to say? Are you trying to say, should I book my investment? That is up to you. Should I book my trade? Hell yes. Yeah, how much? It depends. How much more do you want? I don't have any. It does have support around 36, but it does have a lot of resistance here. So don't short it. It's one of the ones where you either own it as an investment or you just decide that you had enough profits. Gilead, if you lose 80, you will fill the gap into 72. And the sellers are at 90. You take 90 out, they take another leg higher. I'm not a fan of trading Gilead, even though I can chart it well. I've had history with it where it's a biotech or healthcare or whatever the hell it is, and I remember it's being terrible for a long time, and it couldn't find any love anywhere. And this is a monthly chart. This is, what was that? COVID? No, 2015, whatever that was. They're coming into this giant pile of losers up there. People who bought it and are stuck. It's not for me, but you have to learn the company, whether you're investing or you're trading. From a trading perspective, I gave you the numbers already. Below 80, it comes down to 72-ish. And above 90, it might take a leg higher. This is the wrong gold. I think you guys wanted Barrick Gold. Same comments as Agnico earlier. It gave back almost half the rally from here to here. So this is an area of support as a company. What I don't want to see is a bounce here, find sellers, and then come back to here, and then you have head and shoulders, which will not a big deal, but it just finishes finishes the give back. Okay, something like that. I'm not going to fix it. This would be what I'm saying is this is an entry point. This is a better entry point. That's what I'm saying. So don't go all in. Credit put spread would be great. It's on my list. Whoops. Google. Last one on this video, and then I'll stop. I like it from an investment starting point. If you think the markets will be higher in the future, this is a good nibbling place for an investment for Google. This is a good trading place. I'm in a credit spread that's in under fire. I have not done much with it yet. I'm hoping the market stabilizes this week, and if that's the case, I don't think I have to worry about that one. If not, I do have to worry about it. And what would I do? I would roll it out and down if I can. Or just take the shares if I'm able to. Not everybody can. This is a good spot for Google from a trading perspective, and Google, the company, is on rails. It sold hard from Microsoft's rally because of ChatGPT, but I think it was misplaced. Google is one of the largest ATM machines on the planet. It makes money out of nowhere. All right, so I'm going to stop the video and start the second one. 1 second, please.